have a standard script here to read out in terms of the procedures for fire exit, etc. So if you allow me to do that, and then we'll proceed with the main business. So all visitors must sign into the visitor book at Kilncreagh's reception. This includes council staff from other buildings. There is no planned fire evacuation drill or alarm test today. Fire alarm is activated during your visit. You must exit the building immediately. The council officers will direct you to the nearest fire exit and will escort visitors to the building fire assembly point beside the Silver Man at the top of Parliamentary Walk. Kilncreagh staff should report to their floor's assembly point. You should remain at your assembly point until directed to reoccupy the building and only re-enter once the fire marshal has advised it is safe to do so. Please do not attempt to leave the site by vehicle until cleared to do so by the fire marshal to ensure access routes are kept clear for emergency vehicles. Please note that this is a public meeting and that members of the public may be in attendance. The meeting will be recorded by the clerk and published online for public viewing. The taking of photographs, including screenshots, audio or video recordings are not permitted during meetings unless with express permission of the convener. I haven't given any permission along those lines to date. Can members attending virtually activate their cameras where possible to enable you to join by video, and can all attendees mute their microphones when not speaking? Please do not come in during items unless I invite you to do so. If members attending virtually wish to speak on any point, please indicate by clicking on the raise hand function. Members in the chamber should also raise their hand. I will bring you in at an appropriate time. If members have not been able to access all papers for the meeting, please indicate. And I would just at this stage indicate we did send out some late alterations to the second paper we're discussing with highlights in yellow. So I'm assuming everybody's received those papers. Today we will hear each of the items set out of the agenda. I will invite the officer to present the paper, and we have the auditors here as well to answer questions. And members will then have the opportunity to ask questions before we proceed to debate and decision. I'll move on quickly to apologies. We've received apologies from Councillor Fairley, for whom I'm substituting, Councillor McCluckie, Councillor Holden, and Councillor Martin. We have online Councillor McTaggart, Councillor Rennie, and Councillor and sorry, Councillor Keogh. So yes, sorry. You'll have to forgive me. My eyesight's not all it could be. Oh, I did mention Councillor McTaggart. I think when I kicked off. Councillor McTaggart, you've got your hand up. You want to say anything at this stage? No, I don't think she can hear us. So I've gone through the apologies. Are there any declarations of interest? I don't see any declarations of interest, so we'll move on to the first item, which of course is the audited annual accounts 2023-24, and Chief Financial Officer Lindsay Sin is here to speak to the paper. The floor is yours, Lindsay.
Thank you and good afternoon, councillors. So I'm pleased to present the audited annual accounts for the financial year 23-24 for approval, and ask council to note the changes detailed in the cover report from the draft statements previously approved. The audited annual accounts will be presented later than usual due to a number of challenges faced by the Finance Department and availability of the auditors to conclude the audit work. Since the draft financial statements were previously approved for audit, a number of changes have been identified and made to the accounts, and these are detailed in section 4 of the report. As a result of these changes, the general fund reserves have reduced by 123,000 and net assets on the balance sheet have increased by 14 million. There have also been some additional disclosure enhancements made throughout the annual accounts to ensure compliance with the code. I'm happy to take any questions on the accounts, and the council's external auditors will also be presenting their annual report, which is on the agenda under the next item.
Okay, thank you, Lindsay. Councillor Forson.
Thanks, Lindsay. You mentioned that the accounts were submitted late. Can you just confirm for us how late that submission was relative to the statutory deadline?
Thank you. So yes, as I mentioned, the accounts were late. So the draft accounts are due to be prepared by the 30th of June. And unfortunately, we were not able to do that until January, the following January. And that was mainly as a result of the late completion of the prior year accounts, which was 22-23, that completed in August 24. Make sure I've got my dates right. Apologies. So the draft accounts were prepared and this is the final. So it has been a longer period of time than usual to complete the audit. So just around 14 months to complete the audit of the accounts, and also a delay in the initial draft being prepared.
Can you clarify for us then the main factors that contributed to the delay, for example, internal capacity, audit requirements, and maybe even the wider system pressures?
Thank you. Yes. So as I said, the late completion of the 22-23 accounts had already delayed us in terms of producing our 23-24 draft accounts. It's not unknown. I've presented in council and to committee before about the challenges we have in the finance team, and that's some of the wider challenges across council teams as well. So we have had a number of vacancies throughout the team, and it's been particularly challenging to try and recruit to these vacancies. So they are professional qualified accountant posts that are difficult to recruit to, just in terms of our market position as well, because we're competing with the likes of Glasgow and Edinburgh for staff. We have had a number of retirements in the team, which has also led to vacancies as well as turnover. And again, we try to recruit through the normal methods through My Job Scotland, but we've also engaged agencies, both for permanent appointments and for temporary appointments, to get people into these posts. So that is one of the main challenges in terms of capacity, but we have tried to put things in place to mitigate that. As I said, the use of agency and interim posts, but we've also had a review of the finance structure. So we introduced the chief accountant post, that it was a new post, and also an additional accountant in the management accountancy team for a review. So that was agreed back in November 23, and it's taken time for those posts to be embedded and for people to come forward and fill those posts. And we also have a review, an ongoing review. So we've recently, council approved as its budget in February an additional senior accountancy assistant for the corporate team. So we are trying to bolster the team, but alongside the challenges in terms of our staffing, we've also seen an increased amount of queries coming through the auditors as well. So if I look at the number of queries, in 22-23 there were around 300, so we're up at 458, I think, at the moment. So we're seeing the number of queries increase as well over the year. So that alongside that recruitment challenge, alongside vacancies, there were a couple other particular activities that we had to support during the year as well, during the audit period. So the audit for the IGB hadn't concluded, and you may be aware that the Chief Financial Officer and the finance support within that also moved on to other posts. So the partner CFOs were asked to help out with that. So it took up both my time and my team's time to help support on the IJB audit, alongside just supporting in general on the CFO. And there is a number of priorities that have come through in council day-to-day business that we've had to sort of divert resources onto to make sure that we're supporting from a finance perspective. So it's been quite a challenging time, both just on the audit itself and the queries, but also in the day-to-day business that the finance team face.
Thanks, Lindsay. This might not be a question for you, but maybe one for the auditors. The increase in queries, what has been the main reason for that? It's quite a significant increase.
Good afternoon. There's a couple of different reasons and a couple of different things to think through. with the moving timetable, we've had different people roll on and roll off, and we haven't had the same level of continuity within the team that one would ideally like to have in terms of being a really efficient process. So there is an element of that and trying to pick things back up that other people have done. So that there's an element of that. And there's an element of we continuing to strive to hit the highest level of audit quality. And that bar where our regulator expects us to be achieving continues to move, and the level of effort into audit continues to increase.
Thank you. Lindsay, what impact does this delay have on the timetable for subsequent years' accounts? And I suppose I'm wondering how long we think it's going to take before we get back into the normal cycle.
Thank you. A very valid question, and I alluded to it in the covering report where I've said that this, well, it has had an impact on the 24-25 draft accounts. We've not been able to publish them by the deadline for June, and the final deadline as well for signing. And it's having an impact on our 25-26 preparation as well, and we're unlikely to meet the 30th of June deadline for that. So our priority is to make sure that we're doing the year-end transactions as we've done for 24-25. So we're able to report the outturn position and have a position on reserves for both 24-25, 25-26 what we've got. But actually the physical preparation of those draft and audited accounts are significantly delayed. In terms of what we're doing to try and mitigate that, we're obviously working with the external auditors, and we have a lessons learned sort of planning session in the next month to look and to see how we can progress for these future years. But also internally in the team, we've been looking at our structure, and as I said, we put an additional senior accountancy assistant in the corporate team, and we'll also be looking to see if there's anything else that we can do internally to try and support that going forward. But we do stress the importance of this to the team and to other officers within the council, the teams that we support, that the annual accounts are extremely important, and we need to be able to try and catch up and make those deadlines. But it will be a challenge to do that. But I do looking forward to the 26-27 that we can get that back on track again.
Thanks. Is there anything we as a council can be doing to support kind of getting this back on track? I think we all acknowledge that it's very important, and keen to see what else we might be able to support this.
Thank you. It's good to hear the support as well. I think as we develop those internal conversations, if there is anything, we'll present them through the senior leadership group, and if there's anything the council needs to decide on, we would bring that through council if that may need to be additional support or anything else. Thank you.
And one kind of last one from me, I think. The accounts reflected a significant increase in the asset valuations. I think it was about 15 million. I'm wondering what led to that adjustment and whether this is just considered part of the normal kind of revaluation and audit cycle.
Thank you. Yes, our asset revaluations is one that we have a lot of discussion on every year, both internally and then we come through the audit process as well. And it's something that other authorities have the same discussions on. We use an independent valuer to prepare our asset valuations, and we work closely with them alongside our placed colleagues as well. The instance here is the majority of that 14 million adjustment was around about how we did the valuation, or how the valuation was done, and on discussions with the auditors we've changed that and updated the valuations, which caused, I think it's an increase in the balance sheet figure for the assets. Yeah, so there's 14 million. There was a small adjustment in the assets, just in terms of what valuation we used, and we changed them as well. But it was around about how we value them. For a local authority, the valuation of assets isn't as important as it would be for an external organisation. So a private company looking at investments, it is a notional figure on our balance sheet because it is a position at a point in time. So it doesn't affect the general reserves balance that we hold as a council.
That's when you answered my next question.
Thank you, Ellen. The running order will be Councillor Harrison then Councillor Rennie, then Councillor Law shown hands. But before I do that, we've also had Jane's had problems with her mic, so she's going to be questions from Morgan. And launching officer. And I've been a very poor host here. So we've got Lindsay Craig from Deloitte and Phil Mason. Do you want to identify yourselves, and if you want to say anything as an introduction as well? So.
Just to say, Stephen Craig from Deloitte. Nice to meet you all this afternoon. This is my first year end on the council. So, as I said, looking forward to the future and working how we get this back on track.
Okay, thanks, Stephen.
And Phil Mason, audit manager. Like Stephen, this is my first year end on Clackmannanshire Council, but I have a number of years of experience on local government across both England and Scotland.
That's grand, thank you. Right, Scott, fire away your questions.
Thanks, Chair. Hi, Lindsay. Section 4 of the report sets out some material changes made to the accounts during the audit process. To what extent were those changes linked to delays or pressures on the system?
Thank you. So if I take the 4.2, the second one, the impact on the general fund reserve, and the 123,000, it was made up of two separate adjustments there for statutory penalties for council tax debtor and redundancy costs. They are relatively small. Their timing, the redundancy cost was a timing issue about when technicalities of when somebody leaves and when we account for them. So that was an error on our part. And in terms of the council tax debtor for statutory penalties, again, that was something when we worked through and reviewed that was an error that came up as well. So, and in terms of that pressure on the system capacity, unfortunately, the person that used to do the workings for that had left. So if somebody new takes it on, it's not as easy to pick it up as if somebody had been doing that for a continued period of time. So I would say that partly contributed to the error, but no, putting that on the person that did it, that it's just around understanding the process and understanding the calculations and the impact.
Is that you, Scott?
No.
No.
Thanks, Lindsay. So kind of technical issues then, or do they point to some kind of underlying issues that we've got when we're creating the accounts?
Sorry, so yeah, so the redundancy one, no, that was just a straightforward timing error, and just make sure that we're engaging with the relevant people and making sure we've got that information exact. The council tax debtor is quite complex in terms of how we calculate it, so it is a bit technical. But sorry, I didn't answer on the valuation adjustment 4.1, which is the bigger adjustment, and that is quite technical. When, as I said, we use our independent valuers, and sometimes the valuers can have a different view from other professionals around what that valuation is. So it's quite a complex technical area that we're not expected to have in the council, because we're not qualified valuers, and that's why we instruct them. But we are required to have an ability to scrutinise if it's come back, and I think sort of time pressures did sort of contribute to that, as well as the amount of work that we were doing in other areas that probably contributed to that adjustment as well.
Thanks.
Thanks, Scott. Councillor Rennie, Janine?
Thanks, Chair. Just to come back a bit on what had been asked previously. So from my understanding, from what you explained, Lindsay, it sounds like the accounts were delayed by around 7 months, taking into account the cumulative effect from previously. But it sounds like the audit actually took probably about 15 months, am I correct in that? But I'm an accountant, just to give a background, I'm an accountant, and I don't think I've ever known an audit take that long. Obviously, as chair of Audit and Scrutiny Committee, I hear a lot of the updates as we're going through the audit, and I know that, as we've talked about, there was lots of changeovers of staff, and I know that within audit, when there's changeovers of staff, often the same questions are asked again that were asked before, and it just repeatedly happens. And then, you've got the new audit partner having to ask further questions. So I want to know from the auditors really what they're going to do to, in view of the fact of the audit taking so long, what they're going to do to help us put this right for the future, to enable us to get our accounts over the line in future years. I'm not apportioning blame. I'm just saying that obviously there's been some issues that have happened out with your control and to change over the staff, but I'd be very keen to know how that's going to be addressed moving forward to ease things for the council in terms of the timescales that that's taken.
Thanks, Jane. Phil or Stephen, do you want to answer that?
It's a really good question. Firstly, Lindsay mentioned it in terms of the lessons learned. So we've already put a 2-hour session in the diary to go through and say, what collectively do we need to do differently to reduce that overall timetable? I think we need to come up with a realistic timetable in terms of when our account's going to be ready, when are the management team going to have the capacity for us to come in to do the work. And I want to do that in a way that is probably a slightly smaller team coming in that is more efficient and doing work once. Picking it up, putting it down doesn't work for anyone. I've made changes in our team. So Phil said at the start that this is his first year on it. So I've brought additional expertise from a local government and really understanding how that works. So with bringing Phil in, and we've also made some changes in the underlying team as well. But I think it's going to be a collective effort in terms of adhering to deadlines, adhering to a timetable, and making sure that is a realistic timetable to be able to get through the complexities that there are within it.
Okay,
I'm
thank
sure
you.
you'll understand how vital it is for us as a public body to ensure that we have things over the line on time. So I'm surprised that there wasn't somebody with that public sector experience maybe from the beginning, and I think that's going to be really useful moving forward. So obviously you'll try and maintain the team right the way through the audit next time rather than have changes if possible.
So there was expertise within the team. So the senior manager, Rebecca, who unfortunately can't be here today, has that, but I just felt it needed a broader and more depth within it. So it's additional rather than it wasn't there. But yes, clearly having a continuity team on both sides is going to be really helpful to be making it efficient. We will commit to having continuity absolutely where we can. Clearly, we are a professional services firm and people leave our business to go into other pursuits. So sometimes it is not within our complete grasp and our hands, but to the extent that it is, we do commit to that.
Okay, thank you, Stephen. Janine, do you have any further questions? No. Councillor Law, Fiona? No. Are there any further questions then? Councillor Coyne?
Thank you, Provost. Really just asked, having had a run of 3 late filings, missing statutory deadlines, is the damage to the council purely reputational, or is there something else waiting to drop on us?
Lindsay?
Normally we would be notified off the back of the audit work, so the conclusion of the audit, if there was anything going to be taken forward in that respect.
So that means you haven't heard anything, but it could be coming down the line, could it?
Yes, yes.
Okay, thank you. Do you want to continue a line of questioning, Dennis? Or?
I think not. I just self unpopular. No.
But does any other member want to raise questions at this point? I don't see any hands up. So, Ellen, do you wish to move the paper?
Yep, thanks, Provost. I'm pleased to move that the Council approves the audited accounts for 23-24. First of all, I want to recognise the work of the finance team in preparing these accounts alongside the external audit process. I think we know that bringing forward a full set of audited accounts is a significant and complex piece of work, particularly in the context of the wider pressures facing local government. I think it's also important to acknowledge at the outset that these accounts do relate to the 2023-24 financial year. They provide a robust and audited picture of that point in time, but they are by their nature now historical. They tell us where we were, not necessarily where we are today. Members will have heard today about the delay in completing and bringing forward these accounts. It's clearly set out and it's right that we recognise it. The reason includes a combination of system-wide audit pressures, increased scrutiny requirements and capacity challenges, all of which I understand are being experienced not just across the local government sector, but the wider public sector as well. However, I think it's important to be clear that this delay does not detract from the quality or integrity of the accounts themselves. Following the audit, the accounts have been subject to appropriate scrutiny and adjustment, and we can take assurance that they now present a true and fair view of the Council's financial position for the 2023-24 year. The report also highlights a number of material changes made during the audit process. These include most notably updates to asset valuations, as we've heard, resulting in an increase of over £14 million, as well as additional disclosures to strengthen transparency. I think it's important to understand what these changes represent. They're not indicative of a deterioration or improvement in the Council's ability to fund services, but rather reflect more technical accounting adjustments and refinements that ensure the accounts are complete, accurate and fully compliant. In that sense, I think they strengthen the robustness of the financial statements rather than alter the underlying position. In terms of the figures themselves, the accounts show a general fund reserve position of around 26.95 million at the year end. And while that provides a level of resilience, it must be considered in the context of the ongoing financial pressures we face. As members know, the use of reserves is a finite option, and the longer-term challenge remains one of balancing demand, resources and sustainability. The accounts also reflect wider pressures within the system, including demand-led expenditure and the continued need to deliver savings. Again, these are not new issues. They are challenges that have been well rehearsed within this chamber and throughout our budget setting processes. What this report does is provide a clear and audited baseline, a snapshot of our financial position at that point in time. And it also highlights the importance of maintaining capacity within our financial function and ensuring that we have the system and processes in place to deliver timely and accurate financial reporting going forward. So while we should acknowledge the delay and continue to focus on bringing future accounts back to the expected timetable, we should also recognise the work that has been done to ensure that these accounts are complete, accurate and transparent. So in summary, this report provides assurance on the accuracy of our financial statements for 2024, transparency on the material changes that were made during the audit process, and a clear reflection of the financial context in which we were operating at that time. But it also serves as a reminder that our focus must remain on the present and the future, particularly in relation to financial sustainability, capacity and the ongoing delivery of services. And on that basis, I'm happy to move the recommendations.
Thank you, Ellen. Seconding, Councillor Lindsay. Graham.
Thank you, Provost, and thanks to the Council Leader for our proposal. Fully supportive of what she's outlined, and we join in recognising the work of the finance team. This is no mean feat to pull together the amount of work, given the stresses, strains and capacity challenges that have been really clearly outlined. And thanks for the honesty there to outline that so that we can clearly articulate our position. Likewise, I think I would just build on what Ellen said in terms of and the discussion that we've had through the questions in relation to Phil, your comments are reassuring that we are hopefully on a better path to working together. Local government is hard. We find it extremely hard, the decisions we've got to take around it.
And when, system pressure is getting away, when capacity challenges getting away, and it's clear you're experiencing that as well. So, but we find it hugely challenging, and capacity is clearly a challenge across both our sectors and across many sectors at the moment. So, I'm reassured that we're hopefully on a good path to ensuring that our systems are working, that we've got staff in place that understand the sector that we're operating in and can get back to a timetable that I think we'd all expect. I think I'll leave it at that. Right.
Okay, thank you, Graham. I'll open up to debate or comment. Any comments? I don't see any, so do you want to sum up, Ellen? No? Can I just have a show of hands then to approve the 23-24 accounts and referral to the Controller of Audit? Agreed. Thank you. Moving on to item 4. Financial Auditor's Report, sale for the financial year 23-24. I think Lindsay's going to say a few words on this, and then we'll give the floor to the auditor as well. So, Lindsay.
Thank you. I was just going to pass over to
Sorry, Lindsay.
We've had the introductions to take you through the report. Thank you.
Okay, so is it Stephen or Phil?
I'm going to do short introductions, and Phil will then take us through the audit part of the report, and I'll come back and just make some comments on the wider scope and best value. So we won't 100% follow the complete order within the report. Compared with this, we drop around slightly. Firstly, I apologise that the revised draft had to go out late yesterday. Not more I can say. I just wanted to apologise to the members. In the partner introduction, we've all acknowledged that there's been challenges in the timetable. But I'm pleased to say that all of the matters that we listed as outstanding in the report have now been completed, other than subsequent events and receipt of the management letter, which will happen tomorrow, just prior to signing the accounts. But we are in a place to sign the accounts tomorrow. There are a number of findings, both whether controls related or adjustments related, within the appendices to the report. But as Phil takes you through some of our work on the SIG risk areas and the other areas of focus, we'll cross-reference to those as we go. Pass over to Phil.
Thanks, Stephen. So I will take the report as read, but there are a few key areas that I just want to touch on as we go through it and kind of bring to life some of the work that we've done. So I'm going to take you through materiality, our significant risks and area of focus. I'll then touch a little bit on control findings before making reference to what's included in the appendices to our report. I think before I jump into that, I just wanted to highlight the quality indicator slides that are included on page 214 and 215 of the pack. I think, as we've already touched on so far in this meeting, it's important to recognise that the 23-24 audit was challenging for a number of reasons. And what those slides do is just kind of set out some of the reasons behind that. I think the most important thing to say on the back of that is our main focus now is looking ahead to 24-25, 25-26, just ensuring that we're doing everything that we can to catch up, and that we work closely with management, as we said, to go through those lessons learned in a couple of weeks' time, and then make sure we have a good planning booking across the summer to really set us up ahead of the 24-25 audit kicking off. So just jumping to materiality on page 216 of the pack, we've set our materiality at 2% of total gross expenditure, which is in line with Deloitte methodology that we use across all of our local government audits, which has resulted in a materiality for the council of 3.3 million. And we've included in our report all uncorrected misstatements above 166,000. In terms of significant audit risks, so we have 3 identified significant audit risks on this audit, those being management override controls, property valuations, and capital expenditure. In terms of management override controls, this is a risk that we're required to have on all of our audits under auditing standards, and just recognises that management is in a unique position to override controls with financial statements. In terms of findings to report on this risk, we've identified a number of control findings, which we've listed out on page 224 to 227 of the pack. A number of these control findings are linked to our management override of control significant risk, and these centre around the review and challenge of specialist reports, which includes pensions and revaluations, which I know we touched on earlier. Clear documentation of impairment review around revaluations, and also posting of adjustments and trial balance. In terms of our property valuation significant risk, as we've mentioned earlier, we've identified a few control findings and 3 corrected adjustments this year. We have a 13.5 million indexation adjustment, which I know Lindsay covered in her report earlier on. And then we had 2 much smaller corrected misstatements, which were identified by our valuation specialists. These were only just above our reporting threshold of 166,000, so we've included them in our report just for completeness. And then our third significant risk is on capital expenditure. And this just recognises that with the challenging position that the council is in terms of their revenue expenditure budget, it creates the risk and the incentive to incorrectly capitalise expenditure throughout the year. You'll note from our report that it said at the time that work was undergoing final stages of quality review, but I'm happy to report that that's now been completed and we have no findings or adjustments to report in relation to that significant risk. I do just want to point to the control findings and recommendations, which are included on page 224 to 227. I don't plan to go through them individually, as I know I've made reference to a number of them across the significant risks. But what I did want to flag is that what we've done this year is included a priority scaling in terms of red, amber, green, just so it really focuses on what's important going forward into the 24-25 audit. And then before I hand back to Stephen to cover wider scope and best value, I just wanted to make reference to the appendices in our report. On page 274 of the pack, we've listed out all of the unadjusted misstatements identified throughout the course of the 23-24 audit, and we've included underneath the table some explanation of what the adjustments are and how they occurred. And then on page 275, we've listed out all the corrected misstatements, which include the revaluation ones that I just pointed to before. And then the last thing to say is across pages 276 to 278, we've set out all of the corrected and uncorrected disclosed findings that are identified throughout the report. I know that Lindsay pointed to it in her report earlier on, and we appreciate management's collaboration with us in terms of putting changes through to the accounts and really improving the readability of them on some of the findings that we've raised. That was all I wanted to cover, so thank you all for that.
Would it be helpful to pause for questions there on that element of the report, or would you like me to keep going to there?
We could focus on that element and then we'll cover some of the other aspects. So are there any questions at this stage? No, I think we want you to continue if that's possible. Thanks, Steve.
No problem. So on wider scope, as part of our work around the wider scope, we look at 4 areas: being financial management, financial sustainability, vision, leadership, governance, and use of resources. It's important, I think, to note that when we did this work back in sort of back end of 24 and 25, and I appreciate there's been a lot of progression and work done by the management team since we have sought to update and include some of that within it. And some of the responses to some of the recommendations and the comments also highlight that. But there's an element of we had to put a cut-off in place at a point in time in terms of all of the work. So some of it is a little bit out of date as we sit here today. On financial management, we highlighted that there's effective budget setting and monitoring. We made commentary around capacity of the finance team. I think that's probably been well covered now in terms of some of the capacity, the constraints, and what's been happening. We talked to the internal audit function being effective, but some of the findings were, I guess, less favourable in the current year than perhaps others. We do acknowledge that the management team actually asked internal audit to look at some of the areas where they knew there are potential problems in. So whilst those are the findings and those are the reports that have come through, it was quite a focused year from an internal audit perspective in terms of where they wanted to look. So I think that's important from a balance perspective. But overall, we found the financial management to be designed critical. But the financial sustainability, we talked through the budget that's being set in terms of it being a balanced budget, but clearly, and you referenced earlier in terms of the savings and the work that has to be done around achieving some of those savings and those longer term plans, the gap of the funding gap within it. There's clearly a lot of work that needs to be done, identifying those savings, implementing those savings, and not just looking to be able to utilise reserves should the shortfalls stay there. And then that really comes through in terms of the medium term, long term plan and the MTFS in terms of making sure that it's really rigorous in terms of its identification, makeup and implementation. The vision, leadership and governance, we concluded that there's appropriate vision and strategy in place. We talked to the Be the Future target offering model, which has got the strategic priorities looking forward. The local code of corporate governance is consistent with best practice and those good principles coming through the delivery of the governance and local government framework. A bit of a mark. And we also find that the Audit and Scrutiny Committee played a key role in that governance and the overall governance arrangements. And then very lastly, user resources. We've concluded there's appropriate arrangements for the statutory performance information compliance and that was the sorry, I opened another page that says best value and got myself confused. Moving on to the best value reports, just again, key highlights. So positively, we think there's a really good framework in place for integrating work plans, and there was the interim workforce strategy in place at March 24. That's fallen away, but still the initiatives are being taken forward in terms of continuing to develop and then to do it alongside the budget cycle in 27-28 in the target operating model. We found that there were clear plans to use digital tools to really enhance the work environment and really help staff work better, more efficiently. We thought there could be a little bit more around what are the actual benefits coming through from some of those digitalisation and just really ensuring that you're getting the most out of them. We found there was a really proactive approach to flexible working, taking on board external experts and a number of internal reviews, which is pleasing to see. Using data and external expertise, so notably through True and Change, on the workforce planning and development was really good. And then we had the Council's values-based leadership programme on really developing a shared purpose and empowering leaders to work collaboratively was really positive to see. And then the Council sector leading in innovation with the transformation through collaboration project with all corporate serving councils looking to really increase that capacity, resilience, expertise, skill set and to support the commercial system.
Okay, thank you. Thank you, Stephen. Any questions to either Stephen or Phil? Councillor Forson, Ellen, and then Councillor Harris.
Thanks. I've been scribbling away there, but I also have some questions that I've prepared beforehand. So we've received an unmodified audit opinion. Can you just clarify for those of us in the room who are lay people and maybe don't, kind of speak that language, what that means?
Yeah, when you put it like that, it is a little bit confusing, isn't it? So it's a clean opinion. So when I issue an audit opinion, there are a number of different types of opinions that one might issue. Clearly, the most desirable is a clean audit opinion, which we've called unmodified, which is what this is. And you can then have various different ways of drawing attention to perhaps issues within the accounts or issues with being able to do the audit. So it could be like a similar opinion, but a clean audit.
That's good to know. I think using the audit is always important to see where we can kind of do things a little better. So I might be asking some kind of opinion-related questions there. you mentioned it yourself and we mentioned it in the previous report. There's a number of parts that kind of seem to raise concerns both about the use of reserves, but also savings to support the budget. And I kind of was thinking, in the context that we are operating in, we've got reducing budgets and increasing demands for services. If we weren't using reserves and we weren't making savings, in practical terms, how would you be expecting a council like us to balance our budget?
I think what you're doing is appropriate as we sit here today in terms of using the both. I think clearly you're taking choices to not reduce frontline services and therefore to have the expenditure being coming from some of those reserves, which is admirable. At a point in time, there won't be sufficient reserves if that continue to be balanced. I guess that's really what we're just highlighting, is that sort of future-looking piece and ensuring that we're not just looking forward to rely on some reserves.
Okay, in your introduction, you referred to recommending good practice. I was just wondering if you'd give examples of what that good practice might look like. I'm particularly thinking for a council of our size. We know that we've got capacity issues and we know there's concerns about longer term sustainability. So I'm always interested to learn, you know, if there's good practice out there, how can we implement it and what does it look like?
So I think the initial element around that and the recommendations is thinking about the control environments and thinking about how the control environments can improve. And I guess that's part of our role in terms of testing controls, but then bringing forward the recommendations and how you can take that forward. One of the things that I am doing with other clients now is we are starting to use technology much more within our audits, not the one that's called, but in using technology to really drive efficiencies in our approach and how we interact with management teams and complete the work, and actually starting to open the box a little bit to see if there's anything that we're doing that can help the management teams from a tech perspective, is one of the things we're looking at going forward in this as well.
That's good. I'm interested to understand how you get to some of the positions on what's considered significant risks. So if we take capitalisation costs, that's been detailed as a significant risk. There's never been any evidence that they've done it before, and you've audited it, and there's not any evidence that, you know, there's been over-capitalisation. So I'm keen to understand why that still stays there as a significant risk.
Yeah, so within the auditing standards, you have a presumed significant risk for management override control, which is in relation to fraud. So management's position to override controls either for personal gain or perhaps financial misstatement. The second area we typically have is a presumed risk of fraud in revenue. We don't believe that those characteristics exist here in the council the same way they might in other businesses or entities. And so the standards therefore require you to think where could fraud appear in other balances within the financial statements. So whenever we do our risk assessment, both annually but on an ongoing basis, one of the areas, and Phil mentioned it, is around where could fraud or where might there be incentive for fraud, and we feel it's moving between expenditure and capitalisation, and that's why we've pinpointed it to that. So it's more around potential rather than it actually being something. But we do risk assessment every year. We do challenge ourselves each year as to whether or not we have identified the right significant risks. And one of those areas is absolutely to your point. If we have never found an issue, it's well controlled and with good governance, those risks may change.
I do know that it's an area that Lindsay is particularly robust on. You mentioned this again yourselves. You recommend that the council explores opportunities for shared services with other partners. And I was really surprised to see that recommendation and a bit frustrated if I'm being honest, because for quite a number of years, we've been sharing services, you know, kind of all over the place. You know, there's council reports that detail, you know, everything that we've been doing. I'd say for 5 years plus in sharing services with other areas. But I suppose in more recent years, we're seen as a bit sector leading and kind of sharing services. And that information is all there. It's detailed throughout our reports. We talk about it all the time. So I'm just wondering what additional opportunities or approaches do you think that we should be considering? Because I do think that we are doing a lot more than other councils, and I don't see this requirement being put in other councils.
So I think that partly speaks to my point around when we effectively did a lot of this work and how we've tried to update it through a lot of conversations with Nikki and Lindsay. And a number of those conversations highlighted some of those shared services, where you're sharing the services and how you're working in collaboration, how you're thinking through the innovation and taking that to the table. I think there's still potential room for other areas, perhaps within finance, perhaps within where there are more of those capacity constrained. I'm not saying that for definite, but I think it's worth exploring. How do you unlock some of that capacity? There's some technical accounting standards coming down the line that are going to be tricky with capacity constraint within the finance team. Perhaps things like that in terms of how others approach those, how others really embedded and implemented those new quite complicated accounting standards that are on coming down the line.
Thanks. I would be keen to explore that further. If there are specific examples, it would be helpful to have them so that we can implement them. So I think I'm down to my last question now. You've had full access to the council reports and the minutes and discussions. I think you're more than welcome to attend, kind of meetings. Well, sure. You've got other competing priorities. So for me, it's really reassuring that key risks, particularly around the financial sustainability and capacity, are already well understood, and they've been openly discussed through with the chamber. It's not anything, they've been publicly discussed. If you read any of our budget papers, we've been very, very upfront. And over the last 2 years, we've really expanded. We do a budget context paper now, and that really sets out, a lot of information. So I'm just wondering if you can confirm that there are no significant areas of risk that have not already been clearly flagged to us as elected members.
Well, great question. As I sit here today, I can't think of anything else, certainly from our role within as auditors and the work that we do as within the audit. There's nothing else that I can.
And just last wee add-on for me, I'm always keen to kind of look at what we gain from these processes. So I'm wondering if you can identify 2 main areas where this audit has added value to the accounts process and to the financial, I suppose, position of the council moving forward.
I'm not sure it's designed to help the financial position, but I do think we have materially helped move the accounts forward in terms of the quality, the level of disclosures, and the compliance with the code. We spent, obviously, you've spent a lot of time with the management team, really working hard to make sure those disclosures are in compliance. I appreciate that might not be the, can't say that word, that might not be the best example in terms of what you like, but I think it's really important from our perspective. And the other area I think is around continuing to bring forward areas where that control environment can continue to evolve and make sure and really ensure that it's keeping up with, you use the word best practice, but best practice across what we see, not just in other local authority, but I think in other management teams, entities and finance functions.
Thank you.
Thanks, Scott. Councillor Harrison.
Yeah, thanks. Some of these have actually been answered, but I'm going to ask a couple of them anyway. So you highlight on page 214 finance capacity and access to staff within your quality indicators. To what extent is that creating pressures within the system itself, and is that something we should be concerned about? And what can we, our team, both do to mitigate against that in the future? You kind of gave a bit of an answer to that earlier on, but I think it's quite key that we're in this situation. So what is it we are going to do going forward between auditors and ourselves to make sure we get ourselves back on an even keel?
I think the capacity elements, and Lindsay has gone through in terms of where some of those pinch points have been, the competing priorities on the team's time, and the audit coming at points such as budget setting. We have queries clearly, all the competing priorities has to go into the budget setting, so we could try to put pens down and give them a bit of space and a bit of peace for periods of time. So a couple of things, and go back to what I said a bit earlier, was I really want to set down a timetable that is realistic, that both sides can completely buy into, that really considers where some of those pinch points are from a capacity perspective and an availability of time, not just from the management team, but from our side as well. Within our public sector team, the next sort of couple of months is our busiest across the whole year because of the number of NHS clients that we have with March year ends and the reporting of those. So whilst we're doing the debrief in a couple of weeks' time, we'll then give the team a bit of space for a few months before we come back to really start kick-starting the planning for 25, 24, 25. But for me, that just continued open, honest communications about where we both are, what we're both doing, what would each side emphasise, which both teams have got on at that point in time, I think will really help just get a timetable that we can all buy into and we can all deliver to.
Thanks. Going back to your risk pages, I noticed from 225, it was probably the only one that the team didn't really agree with. The statements that were being made, it's probably for Lindsay, surrounding the budget cycle and auditing cycle. Can you kind of expand on the comments that you've made there? Is there anything that you and the team are going to do to try and bring that more into line with what the recommendations were?
Chair, thank you. Yes, and the explanation I give in the management response there was around our outcomes are being updated and reviewed by the budget holders as soon as the quarter ends. So they go in and do their forecast. They have the budget holder meetings with the finance team. So we review it, and then that information feeds up through senior managers and to the directors and to their management team meetings. So in terms of that timely process and that scrutiny, that happens pretty soon after that quarter ends. The time lag is between that being reported to the Audit Scrutiny Committee, which we've just had earlier today, and that was reporting on December, so that's quarter 3. So there's significant time lag. So I do recognise that, and what we're doing is we're looking to see if we can change the audit and scrutiny dates and bring that more into line around before the end of the financial year, around early March time, so that we can have that scrutiny, extra scrutiny on top of your budgets and documents to managers before that financial year ends. So if there is any recovery action, then that's a chance for the budget holders and managers to report that into committee to see what we're doing about it. So also doesn't explicitly say agreed, we are taking steps to try and bring that committee forward to meet that recommendation.
Thanks, Lindsay. On page 215, the kind of quality of draft annual accounts, so that the text in there is, high volume of accounts, comments were raised. That doesn't quite tie in with the adjustments that were noted in the first paper. Is that kind of fair? So I'm giving it some black and white, but it looks like that is a red. But if you look at actually the adjustments that were made, do you think that the red was kind of that was where that should have been, considering the amount of adjustments that had to be made?
So I guess what the adjustments don't cover are the changes in the wording through both the fronts, some of the enhancements within the disclosure, some of the additional disclosures. So the adjustments don't encompass all of the comments that were made and all of the changes that then came from it. So the volume of comments that we had to begin with and the amount of time and work and effort that collectively we went through to move the account from version B1 and through to, I think we've signed 7. That did take quite a bit of effort, which is why the red was there. I do think, however, on a look forward basis, I think we've got a really good base. We've got a really good base to build on for 24-25.
Well, so just on that, lessons learned, the next set of accounts that are coming forward to be audited, we should have both learned from that. Okay. And very last one, on page 217, just picking up on something that you said earlier as we were talking. So those three risks they're generic risks, so they're in every audit that comes forward for you guys. The management override, property valuations and capital expenditure, or did I pick that up wrong?
So no, not quite. It would be, so management override controls, yes. The auditing standards say that every single audit has to assume a presumed broad risk around that area. So that significant risk is present in every single audit. The others are specific to the entity that we are auditing. Now you will see some similarities across local governments because there are similar natures in terms of the businesses. If I went to one of my other clients, I would not see those identified as the risks. They would be different. That doesn't answer it.
No, and listen, it's probably me, and I'm just wondering. So, if we were in AN or council someplace, those three risks would be in their audited accounts as well.
Possibly.
You should have said
There are lots of similarities across councils, so you would expect to see similar risks. Other councils might have a really judgmental or significant pension scheme, and therefore that might sit on the significant risk as opposed to another area of focus. They might have significant issues around the controls and the revenue recognition and how that's coming through. So that might be a significant risk, whereas here it isn't. But I think from a local council, you would expect to see similarities.
I think that is me. Thank you.
Thank you, Scott. Councillor Rennie, Janine.
Yeah, just a quick back on that last one. I think management override of controls is a risk in every single audit. So I think people maybe just don't understand that when they read an audit report. Just that it's just one that's always there. But my concern really is on page 238, where it says an independent internal audit function is in place, and it talks about the decreasing number of substantial assurance reports and increasing number of limited and no assurance opinions arising from the internal audit reviews. And then it goes on and it says, underscore the ongoing challenges within the council's control environment. I take issue with that to an extent because obviously we have our audit and scrutiny committee. And in previous times, the external auditors have attended that committee fairly regularly. But we are very active in the control side of things in terms of audit and scrutiny, have a really intense control over. We are not happy, obviously, in most cases where we have limited assurance. So we're continually looking at that. But some of the matters within the limited and no assurance are out with the council's control, where they fall under the umbrella of the Health and Social Care Partnership, where certain audits that have been related to that have probably held up other internal audits for council because there's been issues there that we've had to address. But we do keep a very tight control and eye on that. We don't let it drift. So I just had a slight concern about the wording of that particular, and I wondered if you'd been at audit and scrutiny and seen how we scrutinise in terms of those areas.
Thank you for that. Yes, I haven't attended every single one since I wanted the engagement, but I have had the pleasure of attending some on the floor. So I don't disagree with that in terms of the overarching audit and scrutiny committee having that oversight and having that holding the management team to account, and in terms of addressing internal audit findings. I guess that the point around the control environment was really looking down at the detail, where the detailed controls are operating and where some of those findings were coming through from, as opposed to doing the standby. Because for me, a really good control environment starts at the bottom up, and then the oversight at the top has got the confidence within those underlying controls. But yeah, your point is well made, and I agree with that.
Okay, thank you.
Thanks, Stephen. Janine, are there any further questions? I don't see any, so Ellen, Councillor Forster, do you want to move the paper?
Yes, thanks, Provost. I would like to move the report. At the outset, I do want to recognise the work of our external auditors and their own finance team in bringing this forward. I think an unmodified audit opinion is not something that we take for granted. It reflects a significant amount of professional diligence and provides important assurance that our financial statements present a true and fair view. However, as we all understand, while an unmodified opinion tells us that our accounts are accurate and compliant, it does not remove very real challenges that we face as a council. And I think those challenges are clearly reflected throughout the report. There's some consistent themes, ongoing pressure on financial sustainability, capacity within finance and across the organisation, the need to deliver savings in a highly constrained environment, and the importance of strong financial oversight and governance. And none of these will come as a surprise to elected members. In fact, I think one of the most important points to recognise today is that the key risks identified in this report are not new. They are risks that have been openly discussed in the Chamber, in committees and through our budget setting process over a number of years. It's important that we recognise that we are operating in a context where budgets are reducing in real terms, demand for services continues to increase, and expectations on local government remain high. This creates a structural challenge, not just for this council, but across the local government sector. The report quite rightly highlights areas such as the use of reserves and the delivery of savings. These are not easy choices, but they are tools available to us in balancing the budget, and each carries its own risks. What matters is that we use them responsibly, transparently, and with a clear understanding of the longer-term implications. It's also worth noting that the report points to areas such as finance capacity and shared services. Again, these are not new areas of focus for the council. We've been actively working to strengthen capacity, and we've been recognised for our innovative approach to partnership working and shared services. This doesn't mean that there's nothing more to do, but it does mean that we're not starting from a standing position. We're already engaged in addressing these challenges. Importantly, the report also reflects that governance arrangements are in place, that issues are being identified, and that there's transparency in how risks are reported and discussed. And I think that does matter, because good governance is not about the absence of risk, it is about how we understand, manage and respond to it. So while we should take assurances from the audit opinion, we should also take seriously the messages within the report. That financial sustainability remains a key challenge, that capacity must continue to be strengthened, and that ongoing scrutiny and discipline will be essential in the years ahead. But we should also be confident that this council is aware of these challenges. We have been discussing them openly, and we've already put in place measures to help address them. Today's report doesn't introduce new concerns, it reinforces the importance of the work that's already underway. So I would encourage members to view the report in that context, as a reassurance of the robustness of our accounts, as a reminder of the challenges that we face, and as a prompt to continue the work we are already doing to secure the council's financial future. So on that basis, I'm happy to move the recommendations.
Thank you, Ellen. Councillor Lindsay, Graham.
Thanks, Provost, and you support the comments of the council leader. It's an interesting one, isn't it? Because it's back that it's the 23-24 accounts, and you find yourself in your head going, why have we got this here? Moved this all along, but we're actually in 25-26. So it's one of these things to try and get your head around, and I've kind of struggled with that. But I think it's played out well in the questions that have been asked and the discussion that we've had. I mean, there's no getting away from the fact that there are aspects, risks that are absolutely a fair reflection of where we currently are as a council. I think that's played out through everybody's contribution, the demands, particularly in my own portfolio area in the council in terms of the people service, the pressures, the demands on that service, and our desire to try and ensure that that service continues to function despite the savings that we need to make to create a sustainable service in council going forward without the over-reliance on reserves and whatnot. So it's really challenging. But there are frustrations, and I think they've been drawn out well as well, that, you know, we talk about collaboration, we talk about partnership, and we're really good at that. But perhaps that will be reflected in the next couple of years in terms of the accounts coming forward, because we are very, very good at that. I think governance-wise, we're in a really good place. And as I've said in other forums, I would be surprised if there's any other council that operates politically as well as we do. And I think that needs to be reflected more as well in terms of the strength of what we do. And just a few weeks ago, maybe in a month, we had a unanimous council budget. Every single councillor around the table voted for a council budget. That's a strong position to be in. So that doesn't give you more money in the bank, but it provides us a strong position to operate from. And, you know, I think 10 years ago when I came into this, you know, if we said that we could get to this position, you know, that's not a bad place to be. But there is a huge amount of work to do in terms of the financial sustainability, as I say. So, so many strengths, and just to draw back to where Councillor Corson left on, there are so many strengths of the council. It is pleasing to hear today that we're going to get to a position where, you know, we're hopefully on the same page and same path, and there is an openness and willingness to support us to do that. It's not going to be easy because there's not easy financial options out there for us, but it's great to hear that we've got support here and some guidance that is going to help us along the way. So thanks for that.
That's great. Thanks, Graham. Are there any other comments in the paper? Don't see any comments. Do you want to sum up, Ellen? No. So what we're doing is we've noted the auditor's report as well as the recommendations for improvement and indeed the best value thematics. So we need to approve the letter of representation, which is in Appendix 1. Is that agreed? Can I have a show of hands, please? Yep, that's unanimous. Thank you. Can I just thank the auditors for their work and for attending today? So I hope you have a safe journey home, James and Phil. And thank you also for everybody else attending. So thank you.